I have some information here for you today because what is going to be a heavy spreadsheet and resources. We're going to show our sources on this one because we want people to understand, because this data is misrepresented, and I think it's misrepresented quite a bit, and to the average person doesn't understand. And you get politicians, talking heads, just talking about debt. How much debt? What are the ratios? It's like, this is not Dave Ramsey here where debt is bad. We use debt to build wealth, but the ratios matter. It's, the same level of debt for one person or one company could be very, very healthy. But on another person, it could be catastrophic, because the ratios are what matter. Okay. And we're going to walk through this. And this is commonly what you see here. And I have column B here is in Canadian dollars and column C is in US dollars. It doesn't actually matter. It's because, again, it's the ratios that matter as long as you're consistent in it. And so what is commonly reported in the media, that is, you see reported debt to GDP around 120%. Okay, so that means the reported debt in Canada at 3.8 trillion. Okay, 3,805 billion, and like, people need to start understanding trillies and billies, because like that's how things are measured for now, until we got to get to quadrillions. But we're gonna go for trillies and billies for now. Okay, we have a GDP of just under 3.2 trillion. So we have 3,174 billion. That means our debt divided by our GDP is 120%. Okay. Conversely, on the US, you have $36,974 billion of reported debt, and you have a GDP of $30,069 billion for 123%. Let's call them the same. Let's just say, like, this is roughly the same, but they're not the same. Like, they are not the same, and we'll drill into it to show you what this is. And so, kind of some of the sources here. Let's look at the reported debt to GDP here. We'll look at the U.S. one first. So the U.S. one, here you go, usdebtclock.org, 36,974 billion. We'll round it up there. Okay, and the GDP, 30,069 billion. Okay, so that's common. People are used to seeing that. But the number we're looking at on reported debt for Canada, I'm going to pull this up, make sure I got the right one here. Okay. When you're hearing this 3.8 trillion here, what does that actually mean? Okay, where is that actually coming from? That 120%, because I would say most people don't even ever hear the 3.8. They just hear 120%. Right. And they're just like, okay, it's 120%. US is 123. It's the same. It's not the same. The devil's in the details here. Okay. Okay, so, and I'm going to go down here, and this is from the StatsCan website. This is December 31st, 2024. Okay. Financial liabilities. Okay, here you go. 3,805 billion. That's where that's coming from. Okay. And our GDP, again, on the StatsCan website here, I took this one, 143 billion. I guess I have 174. It's a little offset. 3,174 billion. Okay. So here we are. Here's the GDP. A little offset in the time period here, because that's Q1 and the debt's on 2024, but it's going to be a percentage point immaterial. Okay. That's where you're getting it. Okay. And then on the US, the 36 versus the 30. Here is the first important point. Okay. This US debt that's commonly reported is US federal government debt.
Okay, so federal debt, entire country supposedly.
It's just the federal government. Yeah, it's just the federal government. Okay. But when you hear 3 trillion, if you hear 120% in Canada, what you're looking at is actually consolidated consolidated Canadian government debt.
So what does that mean for the layperson? What does consolidated government debt mean?
What that means is that's the federal government, that's the provincial government, and that's the municipal and local governments all together in one.
Okay.
It's all together in one. So these are not the same. So when you hear these debt to GDP numbers around 120%, as if they're the same, they're not. The US one at 123% is just the federal government, okay, debt versus GDP. And Canada at 120% is the federal government plus the provincial government plus the municipal and local governments. Okay? So that's the first difference. So I'm going to expand this out here, and we're going to look at another chart. So, and then the ones that the liberal talking heads like to throw up at you to say how amazing Canada is, which is also misleading, by the way. Sure. It's also misleading, is they call it net federal debt. I want to show you how nefarious net federal, and you'll see this one on the, OECD data and stuff. They call it net federal debt. And they will get a number around 30%. And people are like, well, what the heck? How did it go from 120 to 30? Like, what happened there, right? And you'll see that the U.S. government doesn't move that much. So, like, why is it vastly different when they start talking about net federal debt? What net federal debt is? Okay, so how does it go? How does the debt, go to 30%? It's because the net federal debt would be around $906 billion, not even $1 trillion. GDP is still the same. GDP is still the same in this calculation. $3,174 billion on the Canadian side. That's in CAD. $30,069 billion on the US side. That's in USD. Okay. How do they get this 30%? So how do they get the $906 billion? That's the key. Here's where the $906 billion comes from. So we go back to the same StatsCan website. Okay. Instead of going consolidated government, you can separate it here. Federal government, provincial and territorial government, local government, which is, the cities, and CPP. Okay, so it's just the federal government. Okay, when you look at the debt of just the federal government, what you start getting here is you get debt of $1,756 billion. Okay, so that is the first part in our calculation. Okay, $1,756 billion.
Okay.
But then why do we deduct $850 billion? How do they get this net federal debt? They don't like to tell you how they get net federal debt. It sounds good to say we have debt to GDP of 30, but they don't like to say what is net. What are they deducting out? Oh, what are they deducting out? I'll tell you what they're deducting out. And if you go down here to CPP and apply, what they are deducting out is the net financial worth of your CPP fund.
Okay.
So they're saying that's not yours, that's ours. So whenever they try to tell you that CPP, that your debt to GDP is we're the strongest in the G7, is like what they're saying is they've now confiscated your CPP. And here's the number, how they get there. You can see it's like, so you get the $1,756 billion, and then you minus the $850 billion, you get $906 billion of net federal debt. GDP still remains the same, and you're going to get something around 29%. But then people will be like, some people, astute people, are like, okay, I get that, I understand. It's a misrepresented, nefarious number. I get it. But why doesn't the U.S. move that much? Okay, so here is the part where maybe we don't get enough attention on this in Canada, but they're starting to talk about it in the U.S. I start to hear now about it in the U.S. It's like we still start with the $36,973 billion of U.S. debt. Okay, but then what do we deduct? What does the U.S. have? The U.S. doesn't have CPP. What do they have? Is Social Security.
Social Security, right.
Okay, Social Security. So what is going on with the U.S. Social Security? This is very, very scary. So this is the U.S. Social Security Trust Fund, okay? Their balance, interesting enough, peaked in 2020 at $2.9 trillion. I want people to understand that. It's like it peaked at $2.9 trillion. We have $1 trillion of assets in our CPP fund. They have close to $3 trillion of assets in there.
10 times,
10 times the population.
Oh, wow.
10 times the population.
So they're not good savers.
Well, neither are we. Ours is underfunded too, but theirs is like comically underfunded. So, so they have $2.721 trillion in their Social Security Trust Fund. Okay, so when you net that off against their debt, the number doesn't change that much. So instead of 36 trillion, you're only looking at 34 trillion. Okay, so when they start talking about net GDP, net debt to GDP, it only moves from say 123% to 114%. Okay, so that's where they start telling you. So when you get the liberal talking heads that say, "Don't worry, our debt is the best in the G7," it's like, well, I mean, it's like it's a nefarious number, and we're just looking at different shades of bankruptcy, by the way. But like, let's that would be the comparison. So when they're talking about net federal debt, okay, so when you start looking at that, it's like it's good, but it's like that means you confiscated my CPP. Okay.
Yeah.
Okay. Let's look at another.
Which is also why they're so worried about getting an Alberta pension plan, because those funds would have to be removed from the CPP, federal CPP, and put into some kind of an Alberta thing. So they wouldn't be able to have that calculation. Am I right?
Yeah. I mean, in that calculation, it actually has that $1 trillion includes CPP and QPP, so it includes Quebec. But the reason why they're going to fight over the CPP is, they have $1 trillion of assets, but they would need 1.8 trillion to meet their obligations. So they only have like 40% of the money's gone. It's missing, right? It's underfunded. So if people stop paying in tomorrow, they'd be $800 billion short. They need $800 billion to invest and pay out slowly over time to meet their obligations.
Which is why they need more and more new people to come in and start paying into the Ponzi.
The Canada pension Ponzi. Yes.
All right. Okay.
So here it would be in my view, a more fair way to look at debt to GDP is we should look at total federal, provincial or state, and municipal or local debt. Okay,
fair enough.
And here's the reason why. The reason why this is separated a lot for Canada and not for the U.S. is the U.S. is a republic. So the rationale is that constitutionally they wouldn't have to bail out a state if it went bankrupt, where constitutionally it would appear that the Canadian federal government is more obligated to bail out a province or a territory. That is the rationale. I think that entire rationale is, completely useless, because the governments always bail out too big to fail entities, even private entities, private banks, private insurers, whether they have a constitutional responsibility or not. The answer from the government is always, let's bail them out.
Print the money,
bail them out. So I don't think it's useful just because of a technical constitutional difference where they could let someone fail, because let's be honest, did they let the banks fail in 2008? No, they bailed them out.
Yeah.
Did they let Silicon Valley Bank fail?
No.
Were they constitutionally required to? No. So would they let California go bankrupt? No. They just wouldn't, right? And so like someone could argue with me, but it's like that. But I would say like, that's your opinion, and you're probably right that they should let them fail, but they just won't. So it's not about what I think they should do. It's about what I think they should do. It's about what they would do.
Right.
And so a better way to look at it is that $3.805 trillion. That is our total debt. It's often reported as such in Canada, and we hear, that's the common way to report it. And GDP is still the same, 3.1 trillion.
Okay.
But on the U.S., they got about another $4 trillion in state and local debt. Okay, they got about another $4 trillion. Here's some of the states here. I mean, the biggest of such are California, New York, Texas. Okay, but between the three of those alone, they're over $1 trillion. Interesting enough, they actually have more municipal and local debt than they do have state debt. So that's interesting. Tough to get an as-at accounting at any given time with the different reporting, because they are a republic and they are much separate, right, in the reporting standards. So the cutoff date is always different in different jurisdictions. But let's call it $4 trillion
Sure.
approximately. That would be the best estimate I could get for you today. Okay. So that would mean they don't have $36 trillion in debt. They have almost $41 trillion in debt. And so if you were looking for
potentially more because of the municipalities.
Yeah, I think the $4 trillion is probably that's a reasonable estimate from the research that I have. So so you're looking at an apples to apples comparison would not be 120 to 123. It would actually be 100, and the 29 to 114 is totally silly because they're confiscating the CPP and they're confiscating the Social Security Trust Fund. Okay, like I don't think that's a useful fund. Like unless any government who is suggesting that that our debt to GDP is 29%, they should also simultaneously be suggesting in their platform that CPP is coming to an end, that we're stopping the program, not changing it, stopping it, taking the money and stopping it, right? So you can't say, if you want to say the debt to GDP is 30%, that also has to be part of your platform, or else you're misleading people and being disingenuous, okay? So apples to apples comparison here, 120% to 136%. That would be apples to apples. That's all levels of government, whether it's federal, state and provincial, local, municipal, okay, divided by the GDP, okay? 120 versus 136. And you start to see it's like the difference is actually bigger, okay? It's not here. It's not what the talking heads on CBC, the Liberal government, would like you to believe, but it's here, okay? But debt to GDP on its own is like, to me, it's not actually the number. Like, I don't actually care that much about the number. It's like if I'm looking at this as a corporate entity, you know, we provide fractional CFO services. It's like the debt to GDP is like, it's a quick and dirty number, but it's very, very limited in what it tells me. It's very, very limited in what it tells me. Okay, I'm going to break it down how you should look at it instead. Okay?
Well, people, they never really talk too much about this. Well, they do, but the biggest thing that you see on social media and people are really concerned with is the GDP per capita. GDP per capita. That's what they are always worried about and concerned about and saying, oh, America's so much further ahead. I mean, by that number, yes, they are.
Yes.
However,
I'll show you why we probably shouldn't look at the U.S. as the gold standard. By no means is Canada productive. By no means, I think we've seen some stats recently where Canada is, dead last in G7 GDP growth per capita.
Oh, for sure.
But the U.S. being first in that is basically because of a debt splurge. So that, also it's like one of those realms is like probably there's no excuse for being last, but the reasons for being first are probably not all good.
Right. They have a bigger limit on their credit card.
A bigger debt binge, right? People could go and live better and draw a bunch of equity out of their house and run up some credit cards and personal lines of credit and live well for a while. And that might increase the the spending and the output and the economic activity, but like that has its limits, right? And I think the U.S. is, closer and closer to touching those limits every day. So let's look on like how metrics that are probably more useful than debt to GDP.
Sure.
Okay, so I'm going to cover this one here. This is the federal government debt as a percentage of their revenue. Okay, so the federal government on the Canadian side brings in $1 trillion. The federal government debt in Canada is $1,756 billion. That's just the federal government debt. Okay, so I have to go back here. Let's show you how to find this on the Stats Canada website here. And I encourage people to look at this. You don't have to trust this. You can just go look at it. It's a statement of government operations and balance sheet, government's financial statistics. It's given to us every year. And I'm just going to go to the federal government here, apply. And bang, these numbers are not that cryptid here. So we have the 1.7, which I believe we covered before, which would be the total liabilities, $1,756 billion. Okay.
Yep.
And then you have the federal government revenue, $496 billion. Okay. So that's our ratio. So basically, the federal government debt is 3 times the size of the revenue. Okay, that's a concerning number. Okay, that's a concerning number as it is. So like GDP per capita, it's like, okay, we've kind of established that Canada is slightly better off on total GDP than the U.S. GDP per capita is a different discussion for different reasons. Okay, but now we're looking at why debt to GDP itself is somewhat of a misleading number. Okay, the U.S. on the other hand is, they have 36,974 billion. Okay, so they got 36,974 billion. Here's their debt. Here's their GDP. Okay, and here is their revenue. This is their total revenue, 5,157 billion. Okay, this is why it was kind of funny. People like listening to Trump say he's going to get rid of personal taxes, so by tariffs. Yeah. So the entire U.S. trade deficit is 1.3 trillion, and the amount that they generate in income tax revenue is 2.6 trillion. Like, I'm sorry, you're not going to tariff $1.3 trillion trade deficit to replace $2.6 trillion in revenue. It sounds good, but it's not going to happen. And all politicians lie to you. So that's the point where when you watch this show, is like, I piss a lot of people off. It's like, sorry, that guy that you put they all lie, because that's the path to get. If they told the truth, it's a very grim picture, and they're not going to tell the truth. So they become unelectable.
Wouldn't get elected.
Completely unelectable if they told the truth. So people aren't ready for it. Just the viewers of this podcast are ready. But even what we say, we know it won't be palatable to a lot of people because they're not ready to hear the truth, right? So,
well, the point of this is to get people on the life raft.
On the life raft.
Get on the life raft. Money's fake. Borrow the fake money. Buy real assets, because you can. You can do it.
Because we still can. Because it's insane that we still can. Yes. When you see what the underpinning of the money is, the full faith and credit of these governments is bizarre. They have no credit. They're broke. So when you look at the U.S. government, they have $36 trillion of federal government debt, and they only have $5 trillion in total revenue. Wow. So their debt is 717% of their revenue, where in Canada it's only 354% of the revenue.
Still terrible.
But we're discerning different shades of terrible, and one is dramatically worse. Okay, and so why is the U.S. output so high right now compared to the G7? It's not because they're entirely more productive. It's because they're on a massive debt binge. I'll go further because it gets worse.
Well, I think according to Chrystia Freeland, I think it was last year, said just stop your Disney Plus subscription.
Yeah. Disney Plus is going to fix this.
Maybe that's what they got to do, is stop their Disney Plus subscription.
They should stop their Disney Plus subscriptions. Probably they're a little more, so they're going to have to stop their Disney Plus and their Netflix. So, okay. Now, let's reel it back in, because we already know, okay, this is a better way to look. Now I'm starting to get like, how do I look at this as a fractional CFO? Because I look at this, I'm concerned. My debt to my revenue is 354% versus 117%. That on its own is not necessarily insurmountable. But here's where it starts to get really, really ugly, is you're going to look at the total federal, provincial, state, and municipal debt, and then I want to compare it to our sovereign wealth. And people don't know, it's like, we do have a sovereign wealth fund. It's just called CPP, okay? And the U.S. does have a sovereign wealth fund. It's just called their Social Security Trust Fund.
Sure.
Okay? Now, one could suggest it's comical to call them a sovereign wealth fund because they're invested in such bad stuff, but that's a different discussion for a different way. That could be changed. Like, that could be changed anytime they want to, okay? And I would suggest that could be changed with smaller political resistance. But the amount that's in there today can't. You could start deploying it into more efficient assets. That could change with an election, but you can't change the value.
Right.
The starting point's the same. Okay, so in Canada, we have total federal, provincial, state, municipal debt of $3,805 billion. Okay.
Right.
And our sovereign wealth fund, which is our CPP, is $1,061 billion. So that means our debt is 359% of our wealth. Here's where we start talking about, like, if I'm looking at this as a corporation, it's like, this is bankrupt.
Yes.
Okay, this is bankrupt. And it gets different shades of bank. I'll keep going through it, right? But the U.S. it's like, they have $40 trillion in
41
in all levels of government, $41 trillion, and they only have $2.7 trillion in their Social Security trust fund. They have it's 1,506% of their total wealth.
So that's when they cut up your credit cards, right? They confiscate your car. They take all your stuff away and say, no, you can't spend anymore. That's what would happen to us. I mean, way before that, like 1,506%.
I mean,
like your savings are. They're not savings.
I would suggest this is the point where they cut off the credit cards. They start calling and cutting off the credit cards. And this is the point where, like, your car's getting towed and the police are outside because you've run up someone else's credit cards at the same time. like this is like we do consults with these sort of revenues. And,
right.
And they're tough consults where we're telling people, like, I'm sorry, like, this is a consumer proposal. This is a bankruptcy procedure, right? And there are paths out of that, right? For individuals, they're ugly and they're not pretty, but if you have a way to earn income, it's like it's better than being poor forever.
Right.
Okay.
There's paths out for governments too.
There's paths
potentially.
Out. Yeah. But this is the point where
unelectable, but possible.
And so this is like the type of rate. Now, we don't come in with it. No one comes into our office with $3 trillion in debt. But people come in with that sort of ratio, okay, right, where their debt is 359% of their wealth, okay. When we start getting like large debt loads, though, like anything over $1 million, like of course broke people can get like really, really wild numbers, right? But you start getting like people with assets over $1 million, and they have ratios like this. The question is like, how the heck did you do it? You're broke too, but it's like, how did you actually get here? Because governments can do it because they got a money printer, but individuals don't have a money printer. So we start looking at that. You start to wonder, like I said, you're running up someone else's credit cards. There's usually, potentially illegal things that are happening in order to get that sort of ratio here, where your debt is.
I'm pretty sure you can draw some parallels that some illegal things were happening in order to get that much debt.
Yeah.
Come on.
It is just, and there would be one, another layer here that we need to look at is the deficit. This is our deficit, because people, we're going to grow our way out, people. We're growing our way out, okay? And in Canada, we're like right at the red line. When we look at our total debt to our sovereign wealth, it looks like a bankruptcy. Mm-hmm. In governments, they have a money printer. We don't have a money printer. So the idea is, on a private side, you don't have this, right? No one's going to lend money to an entity or person that's burning through cash flow. Okay, that's not what's going to work. But on the government, they can just print the money. Okay, right. So they will say that we can grow our way out of it. And in Canada, we're pretty much right at the red line. 65, our deficit, so the amount that our expenses exceed our revenue every year, is $65 billion. $65 billion, right? Of course,
and that's just the number they reported recently. Right?
I mean, they threw in the extra $20 billion at the last minute. Remember, they thought it was
supposed to be 40, then it was 60, and now there is no budget. So
yeah, who knows what it is?
We'll tell you later. Wink, wink.
We were right at the red line anyways, okay? Sure. And that's at 2%. Like, growing the economy by 2%, remember, what's inflation going to be? 2%.
Right.
2%, right? Don't tell them that the world's increase of gold production is 2% for the last couple hundred years, but why did they choose 2%? That's a different story. Okay,